Welcome to Rising Tide Startups, where we chat with startup founders and solopreneurs just like you from all over the globe. During our chat today, picture yourself starting your own startup journey. If our guests can do it, you can too. Every episode of Rising Tide Startups is sponsored by Podbrand Media. Let Podbrand create and host your company-branded podcast. Learn more at podbrandmedia.com. This is Rising Tide Startups. My name is Kevin Pruitt, and I've got a great guest with me today. We've already had a really good time chatting and had some geographic intersections that we've talked about even before we hit the big red record button. But Giuseppe Sette, we got joining us today. Giuseppe, thank you for joining us on Rising Tide.
Amazing. Glad to be here. Thanks for the invite.
Hey, if you and I met, say, at a networking event, how would you introduce yourself to me now that I butchered your name?
Well, that's great. I'm a hedge fund manager, a global macro hedge fund manager, which, to make it more popular culture, is the same job as George Soros. And more recently, I've been involved in teaching the same job to AIs, effectively doing what Harvey is for lawyers, but for the whole investment profession at large. Hedge funds, PEs, distressed, it all starts with an analyst. And I think that honestly, like in the last quarter, we really cracked it. If I look at the things that the system is capable at this point, there's not much that I could do as a young analyst in the PE practice of Bain that the system can do now.
Yeah, I think that's a worrying sentiment in so many different professions right now, is that, hey, what can AI do this job better than I can? And I do want to get into kind of the formation of the company and the origin story, but it's interesting the name. And I know this is there's some kind of throwback to George Soros theory, and there's some connection there. So talk about that and kind of maybe explain just what that theory is in brief.
Absolutely. Well, let's start with George. George wrote a book that effectively explained this belief, which I think is deeply ingrained in the markets this day, that the market and the economy speak to each other. Yeah, sure. When the economy tanks, the market reflects it, but also if the market does something, it can have an impact on the economy. And that was his intuition. The reason why we chose that name is twofold. On the one hand, is a nod to George and to the investing community. Our angel investor was Stanley Druckenmiller, who was his right-hand man back in the 90s. But there is also a secondary meaning, which is the kind of thinking that RAI needs to do to solve hard research problems is very self-reflective. You need to be aware of what you're doing. So compared to your baseline LLMs, that requires a higher order of reasoning, which is extremely reflective, self-reflective, and self-aware. And that's how it all came together. And I think that the name kind of speaks to a certain audience, which is our natural audience, that is like buy-side managers and wealth managers to a degree.
So when did the company start? When did you and Jan get together and say, hey, this is a great idea?
Well, I think that this is one of those companies that are born in the field. Jan and I have known each other well a decade before the formation of the company, which was just before COVID. And Jan and I have worked for a good part of those years together. We were managing as co-chief investment officers the global macro franchise of Swiss asset manager Lombard Odier, and managing it, him from New York, me from London. We effectively deployed a style of investment which is best described as discretionary global macro. However, as it often happens, we belong to, if you want, to a generation that straddled two approaches. The classic discretionary approach of Tudor Jones, Druckenmiller, Soros, but also a tendency to think a lot about tech.
Mm-hmm.
And we started to use tech. We often woke up in the morning and felt like what I'm doing now, it's taking me 2 hours and I shouldn't be doing it. There should be some technology that can help me do that. And one thing led to another. even before the LLM technology, our goal was pretty much the same as it is today, which is the following. If you have a query or a task that you need to solve, there's usually a good tool to solve it in your
Yep.
investment process. And we'd like to have an interface, a conversation with the system that can effectively, on a query, get us the right tool. I think that what changed is the following. At the beginning, it was almost like a search engine for
Mm.
capabilities. At this point, with the incredible boost that we got from LLMs, we can do open-ended thinking. And that's where we landed where we landed today. This is interesting because I think that it tells a story also about reasons for why to embark in a venture. I think that experiencing a problem firsthand and solving it goes a long way to help you create a venture that succeeds. I wouldn't say that we've succeeded yet completely, but we've achieved some remarkable results.
Yeah, for sure. And I mean that is kind of the business model. You go back to like the lean, startup method, just hey, we're gonna iterate, we're gonna test and let's get something out there and solve that first problem and then pivot from there. But what year was this like did you have that aha moment you said, "Hey, we've solved our first problem here." And now this is not just a resource, this is actually a company.
That's a good question. And I'm going to say that it happened a few times and not just once. Um, The first time it happened was before the formation of the company. I remember that we created a portion of this capability to play with portfolios. And then one of our colleagues in the wealth management space of Lombard Odier asked us to try it. And then I came back 2 hours later and he was still playing with it. So clearly we felt, okay, that struck a chord with that
Yeah.
specific use case. Beyond that, I think that we've had one or two major breakthroughs in how to use technology, how to understand data, but the biggest one, showing how the technology is really moving at an exponential pace, has been no, undoubtedly last quarter. Last quarter,
Hmm.
I threw back at, let me qualify it a little bit. This is when Trump came out with the advice to Coke to use US sugar cane rather than corn syrup from Mexico. And this brought back a lot of memories of my younger years doing private equity due diligence because it's a classic thing as an analyst. You get at 11 in the night, you're totally confused, the seventh coffee of the day, and they want it for next morning at 6. I formulated the problem that's very classical. What is the impact on the sugar demand, on the demand of sugar,
Hmm.
which is a typical consulting use case. Take a Coke can, how many spoons of sugar? 7. Well, okay, in a bushel of sugar cane, how many spoonfuls of sugar do I have? And from there, you derive the impact on the market. I can easily imagine that younger Giuseppe would have spent 4 hours there, A, to find the data, B, to think it through, and most importantly, 2 hours to make sure that I didn't say something crazy at 2 in the morning. We plugged this in into Reflexivity and we got the answer back 7 minutes later. Just like my MD would have done, I told it, I don't really believe you, check yourself. And another 12 minutes later, it came out with a checklist where every piece of data had been double checked. All in all, I mean, 20 minutes.
Yeah. That's
It's one of those moments that made me feel a little bit like the first time I used GPT, when the ground is almost shaking under your feet because
mhm.
you're saying, oh my God, it's happening.
So my degree was in economics. So I know that there are actual data-driven impacts on markets, and I know there are emotional impacts on markets. Does reflexivity kind of work from both of those sides? Because I mean, it's one thing to say, okay, the sugar impact on Coke is based on the fact that there's this many bushels, this many spoonfuls of sugar in a bushel, and how many more bushels you would sell, and how many they sell at annually, and just extrapolate the answer, versus somebody having a knee-jerk reaction and saying, "Hey, I'm going to go long on sugar right now because I heard President Trump say something about it, and I think it's going to have an impact on the market." So how do you balance those two market factors?
Well, let me put it in a let me answer it by not answering it. Today,
You're going to run for politics, aren't
reflexivity.
you?
No, but you see where I'm going. I'm gonna get to the point, but
Yes.
I also want to qualify the answer in the following way. Today, reflexivity is your junior analyst.
Hmm.
Ask it whatever you want, and if you give it a very lean prompt, it's going to do its best to think it through and come up with a reasonable framework. But the way that people, HR managers, P managers are using it in the best way is to actually write down how they like to tackle a specific
Hmm.
problem and then tell this is the methodology applied to stock XYZ
Mm.
test
Yeah.
line. This is transformational. We've seen prompts that are 10 pages long with a complete due diligence or initiation process for a new stock. So, getting back to your question, I think that today reflexivity is only as good as you are in finding a way to gauge sentiment.
Mm.
However, my statement is valid as of February 12th of 2026. If today reflexivity is a junior analyst, maybe next year is going to be a senior analyst.
Yeah.
The year after is going to be a major portfolio manager until it's capable of running a portfolio.
Well, and if it's continuously learning in it within itself anyway, I mean, it's promoting itself, in the role
Correct.
for sure. I am very interested in just the idea around this, and I mean, I can see a use case much more broadly than just big hedge funds or PE firms. This is almost like at some level this is like an everyman's tool, or every person's tool. I mean, do you anticipate that there will be a version or there will be an iteration of reflexivity that will apply across the board?
So this is something that we ponder for a long time, and I think that the answer is yes. It's not today, but it's just because we're seeing the classic disinflationary price point in technology, and
Hmm.
we're not there yet
Yep.
to get it to the level of cheapness for each query that we require to make it available to a PA account. Let me qualify it in further by explaining that the way we achieve better results, the way we manage to be the next thing after your vanilla GPTs, baseline Genius, etc., is that we have a fantastic higher reasoning level that has a lot of memory, is aware of everything that's happening, and thinks continuously about the small snippets of analysis that are done at the lower level. It's aware to a degree of what it's doing. Put it in a different way, that means that we solve the problem of higher thinking with money. We spend for any single query that you might do, we might run around in parallel 200 to 500 queries. So it's
Hmm.
obviously very, very complex to coordinate them, herding the
Hmm.
cats, we call it. But it's also extremely effective in the end because it gives you a high quality result.
Yep.
One day, this is going to be much cheaper to run.
Yes. Yeah. And I would think, and does it remove bias? Does it remove human bias that just says or emotional bias?
I want to say it depends on you. Or actually, what I really want to say is no. What do I mean by that? The analysis can be the highest quality analysis you want. Then all of a sudden, you find yourself holding a unit of risk.
Hmm.
And if you trade it, it's your psychology when you hold this risk that changes how you
Yeah.
manage it.
Yeah.
That's also a reason why retail investors oftentimes tend to have these incredible negative but straight line curves of P&L because they become emotional. And by the way, I said retail investors, but in my experience, we professionals do exactly the same. So I think it's going to give us the tools to be better, but it's also up to us.
So I'm trying to put myself in the position of like a junior analyst right now. And let's say that my fund manager comes to me and says, "Hey, we're going to implement reflexivity in your role. By the way, we part of their sales pitch is that they think they're going to replace you in 6 months." What's the emotional response when you're reaching out to these PE firms and you're reaching out to hedge funds? I mean, is it that they're saying, "Hey, we are data-driven people. We are analytical thinkers. So we're going to take the most cost-effective approach that's going to drive the highest return, um, take the human factor out of the mix," or are they saying, we got to find a balance here. We can't just like make people, you know, eliminate an entire job category, and affect hundreds of thousands of people across the globe type thing. So what is the balance? And I'm asking you these are more macro questions than micro, just like, and it not driven by reflexivity, but just this AI, explosion as a whole. How do you balance that?
So I think that you move with speed and caution at the same time.
Hmm.
If you're an analyst in a PE firm, you're probably good now because they know that AI is coming, but they also cannot afford to do anything abrupt. It's
Mm.
handover passage. And by the time the handover is through, you're already at VP level, MD
Mm.
level, you've done your career,
Yeah. Or
you're
you're not
just
there any
making the
longer.
final
Yeah.
decision. Exactly.
Yeah.
The concern is for Gen Alpha and to a degree Gen Zeta
Hmm.
because there's going to be credibly fewer spots for junior resources. Back in the days in an investment bank, I remember when if you want like in the heydays of the 90s, the 2000s, the Goldmans of the world, the Morgan Stanleys of the world, the Merrills, they used to take in trains of young analysts, churn
Yeah.
them through. There was space for everybody.
Yeah.
I suspect that we won't be seeing the same phenomenon for Gen Alpha.
Hmm.
And it's a question that really impacts everybody in any case, because even our generation, we're maybe parents, maybe grandparents, maybe uncles, or whatever we are, we look at the next generation and say, what is the advice that we should give them? And I honestly don't know.
Well, see, you're answering questions before I ask them, because I was going to ask you to say, "Hey, speak to Gen Alpha, Gen Z," that says, "Hey, this is how you can prepare for that." I mean, there are always going to be adaptations. We're going to, societally evolve, based on the market conditions and things like that. And I think that if if these kids will, kind of see the writing on the wall, I think they can adapt and they can step into, and because there will be new opportunities created through this as well. It's not just like it's always a shrinking, pool. So, um, what are some
I
areas
guess
just off top of your head that you're thinking, if a kid could kind of focus in maybe these areas, it might be good.
Well, I think that the first thing that you want to focus on is to learn how to work with AI. And I don't think it's going to be a problem because there is a natural propensity of these junior generations that are born with any technology to
Yep.
embrace it.
Yep.
It's always been like that,
Yep.
whichever generation. Then I think that we need to rethink what are the hot jobs as we see capital become more and more and more productive, I think that there's going to be a lot of jobs produced where it's healthier for your long-term career prospects
Hmm.
to be closer to the principal. So I'm thinking in the financial space, anything that's wealth and that's high touch, close to the principal makes a lot of sense. This is speaking to the environment that's more, how can I say, like natural for me,
Hmm.
which is finance, hedge funds, asset
Sure.
managers, and wealth managers. Outside of those categories, I think that there are a lot of jobs that are underappreciated for a specific aspect. I don't think that what's going to defend us from AI taking our jobs is those classic, oh, humans are creative, so be creative because the human component of your, how can I say, your contribution is what's going to make it different. It's not true. I mean, AIs can write novels and make paintings.
Yep.
I think that there is another angle that people need to be aware. There are jobs where we will not trust the AI. We won't feel okay to give up agency, politicians, judges, to a degree surgeons, because
Mm.
that's going to be like an adoption that's lower. A doctor gives you a pill.
Yep.
I trust the AI.
Yep.
Do I want to risk an open art with AI that might have a bug, well, maybe my generation might not be so keen. So I think that you need to think it in terms of what are those moments in our life where we just will not trust an AI for another 20 years
Yeah,
to
that's
do a
good.
job. Policemen, but who
Hmm.
knows, even there, like, I mean, there's going to be a different adoption of tools. Things that are unexpected. Jokingly, I'll close on that because I think it's relevant. I mean, the priesthood. Maybe people will want a person to be like their pastor or their priest.
Well, yeah, it's if yes, if you can remove the emotional side of things or the bias or the sin nature of human beings,
Exactly,
that's right. I
exactly.
love that. So yeah, it is I mean it is Aldous Huxley Brave New World stuff. I mean it really is
It's
it is
insane.
a different day. Um Tell me about just the growth of the company itself. So, once you kind of got your feet under you, you found some solid ground, you saw some early adoption. What does it look like from, say, post-COVID? You said, last quarter it kind of blew up, in a positive way, but what does it look like, say, post-COVID to today?
We've done, I would say, fairly well, both on the fundraising side and on the commercial traction side. Um, on the latter, which is obviously the one that you always need to end up looking at, can you sell this product? We've been effectively doubling and sorry, tripling and doubling our revenue on a consistent basis through the last few years, selling effectively to a very typical captive audience
Hmm.
and having longer discussions about partnerships with large institutions, which, as you obviously know well, take a longer time. They
Yeah.
might take 2 years to talk with you
Yeah.
because there's a classic thought process in a large institution when technological change arrives. It's a make or buy.
Hmm.
And usually they tend to try to make, then they realize that there is a good balance between the two that can help them to make faster by buying something, and that's where we fall into the equation. We're going to be announcing some major partnerships in the next few weeks, which are all under wraps, and we're extremely happy and honored to be able to have to have been able to have closed these partnerships. But effectively, it brings us to the point where we are able to contribute to a larger product, our deep specialism, which is smart higher order reasoning.
I'm gonna play Kevin O'Leary off of Shark Tank here a little bit. Is one of the questions he always asks is this a licensing play versus a standalone play? I mean, have you is the product itself, and I want you to you know um, you know reveal any trade secrets here, but is this a something that if a large institution can just implement in my own tech stack and as or is that it is a software, that's not an outside vendor type thing. I can incorporate it and create it almost internally like a white labeled, solution, or is this it really is a standalone, you're a vendor, relationship with this institution?
So I mean, it's honestly it's a good question to ask, especially in the context of a company that's still like raising capital. You need to have solid answers to that. The core of our product, what we sell, is intelligence, specialized, super narrowly specialized in doing capital markets work or financial work at large. We have done both. We have sold it as a building block, a powerful
Hmm.
engine, a carburetor to insert into larger
Right.
processes. And you have to do that because in the space that we're in, let me make a name with whom we have not spoken, JP Morgan. JP
Hmm.
Morgan, we've seen Jamie that has like pushed AI very hard, and that means that there are like probably 100 threads of AI development at
Yeah.
JP Morgan. You can't expect to go there and be the only solution. You need to
Right.
play with that. On the flip side, our natural space, which is the buy side manager in its broader definition, is very much used to the terminal, the Bloomberg terminal in
Hmm.
particular. Now, Bloomberg solved 30, almost 40 years ago, the problem of data delivery. and got people used to having access to something that sits on their desktop and they can interact with. Many decades later, GPT told us that we can have the same interface at terminal to ask questions, and so people do expect that. However, AIs are definitely tools in a broader
Hmm.
context where people want to do their own architecting of solutions. And so, to a degree, even to the terminal business, we allow the individual user like you to build his own solutions
Hmm.
because you know what you need.
Yeah. So it sounds like to me that your biggest competitor may be just an in-house solution.
Well, I mean, to a degree, that might be our biggest enabler because
No, that's true.
it's
Depending on where you land,
extremely
yeah.
it's extremely hard to achieve some of the things that we've achieved. I strongly encourage you to go out, play. We'll ask for a trial. Everybody can do that, even if you're not a professional, and you will see that some of the responses are just astounding.
Hmm.
One of our customers quite recently did a piece of due diligence on a stock, and then he came back to us and said, "My analyst takes 2 to 5 days to do this. Reflexivity did it in 19 minutes, and it was perfect."
Yeah, that I if nothing else would kind of verify that you've landed on something good. I mean, to hear those testimonials that you haven't solicited, people are just coming back and saying, "Hey, I just want to tell you what happened when I tried this." So that is amazing. I prognosticate a little bit into the future. What is it going to look like, with the speed of AI just changing, in quantum speed. So what is this going to look like 3 to 5 years down the road?
I mean, 5 years at this point is a breakaway horizon, and by this I mean that we're all of us that are closely watching and working in the AI sector are looking for one and one thing only: closed loops of improvement in the AI, in the sense that for the
Hmm.
time being, you have people that are extremely smart, smarter than me, smarter than you, and they're doing a lot of pushing of the technological edge. And they're doing great. But the moment the same teams tell to the AI, improve yourself, 1 week later, something incredible could happen.
Hmm.
When you read articles that are cautioning the industry about this, that is a serious, I don't want to call it threat, but that is a serious event that will hit our lives in the next 5 years or
Yeah.
something.
Yeah.
And we will wake up one day and we will realize that a true quantum leap has happened and we don't know what we have on our hands anymore.
Hmm. I think that is a great point. Just there it is interesting that I think there's enough fear. Maybe fear is not a good word. Maybe concern in this space is that there are a lot of people that are trying to maybe self-correct, in the process and trying to, hedge or put some barriers in place to this just running away with itself type thing. But I one more question I want to ask you before we wrap up today is the tool itself. There's seems to be, from the layman's perspective like me, there seems to be two different pathways here, two different outcomes. One is that reflexivity gives me enough data to make a good decision. That's what it's more on the research side. But I would say I need help more on the recommendation side than I do on the research side. So, will it do both? Will it come back and say, okay, we've analyzed these 5 stocks. We anticipate we encourage you to, and I'm obviously dumbing it down in linguistically, but say we encourage you to put 25% of your portfolio in this stock and 15 in this based on your risk profile and what you want to gain and what we think it's going to do. Is it that granular, or is that an outcome that I could expect?
Oh yeah, absolutely. First of all, because the latter is the product of the former. And the
For
only thing
sure.
separating them is how you instruct it. naturally, as capabilities progress, so does the knowledge base, and so we'll get to the point where it's capable of doing these things completely in independence. But giving agency to a machine will feel much better if the framework that the machine implements comes from you.
Yeah.
So the way I expect this to work in the future is that we will keep on being the NVIDIA of the system, in the sense that we provide with the shovels, and then the Microsoft of the world, the OpenAI of the world, they do the training, which means that they create the processes that manage the money. If there's something I have absolutely no doubt, is that all the major asset managers, BlackRock, or you name it, Fidelity, PIMCO in the fixed income space, and all the alternatives like BlackRock, like KKR, etc., will launch in the next 10 years fully automated AI-driven investment processes that will probably have a very compelling marketing story, which is this AI never sleeps. It's always working for you.
Yep. Does this also apply to the crypto space equally well?
I mean, one would expect that the crypto guys, being very, very technologically savvy apologists, would be the first ones to embrace it. Think about the fact that well before the AI as we talk about it today, crypto created something they found that is the best thing that ever came there, which is smart contracts. It's entirely possible that in like 50 years, we will have smart contracts that are embedded in AI that embeds in smart contracts. And that's how you buy a house.
Yep. From anywhere on the planet. Love it. Or maybe even Mars by that time if Elon has
Mars.
Exactly. Hey, Giuseppe, thank you for just taking time today. Is there anything that we haven't touched on that you would just like to wrap us up with today that you want to leave with our audience?
Well, I mean, I guess that I would strongly encourage everybody who follows your series to be extremely aware of what's happening in our field, because it's going to upend our lives. And I have no idea or no way to gauge how. So we all have almost a duty to ourselves to be aware of what's happening. Like Hemingway say about bankruptcy, it happens very, very, very slowly, and then all of a sudden, we're going to wake up one day where the impact on our lives moves from, oh, I spoke with GPT about how to cook chicken, to some deep, profound impact in our lives. Now, obviously, I presume that considering the topic of the series, your audience is very, very keenly aware of the tech, but definitely this is happening right now.
Well, I love it. I can smell my neighbors cooking the chicken now. So I think it's certainly upon us. But man, I really appreciate you taking the time today. And really, this is a highly complex and subject, and I appreciate you taking the time to explain it in terms that our entire audience, including the host, would understand. But very much appreciated. I know it's getting late for you there, but just thank you again for joining us and just for playing your part in helping all boats rise in a rising tide. Giuseppe, thanks again. Have a great weekend.
Have a great weekend. Take care.
And now here's a quick word from one of our new sponsors on Rising Tide Startups. Every episode of Rising Tide Startups is sponsored by Podbrand Media. So you started your own company or branded podcast, and now it's fading. Let Podbrand give it new life. Check out podbrandmedia.com to learn more. We hope you heard some great takeaways and are now ready to take action yourself. As always, thank you for listening and helping all boats rise in a rising tide.